Let's go. Facebook right now up over $200 in after hours trading, up 10%. That's jumped again. Up 10% after hours after reporting earnings, after rising 6% in the normal trading day. We're talking about a 16% upswing today. What the crap is going on? Well, first off, the initial upswing today before this earnings report, which was lovely, by the way, but before this earnings report was due to hope of a drug that could be helping in terms of our current virus situation. And secondly, because Google had such positive earnings the day prior, so the evening prior. So obviously investors were excited about tech, these big tech. Let's look at this report, though, and see what's going on here at Facebook. Holy crap. So Facebook, look at that. GAAP EPS of $1.71. Beat by 1 cent. That's right, they beat on an EPS standpoint. Very good. Very good in terms of that. I'm super excited about that line, especially that's GAAP EPS. Talk about money printing. Whew, that's not the non-GAAP stuff where they're going to, go with whatever metrics they want to. This is GAAP EPS, okay? That's pure money being printed. Revenue of $17.7 billion, up 17.6% year over year, beats by $500 million. What the heck? Massive growth. That's awesome. That's fantastic. That's some really exciting beats right there. I mean, you expect it. I mean, all we hear right now is the doom and gloom of ad rates, this, that. It's just a nightmare right now in terms of sentiment. It was for a little bit, at least. So maybe analysts are going to stop being butthurt because they keep losing money. So Facebook is up 6.4% in early after hours trading following. Revenues rose 18%. Operating income jumped 78% on higher margins. And net income more than doubled. Freak! Usage came in slightly higher than expected as well. Daily active users at 1.73 billion, up 11%. Frick. Versus 1.7 billion flat expected. Monthly active users of 2.6, up 10% versus 2.55 billion expected. Holy crap. Daily active people, now we're including all platforms here, was up 12%, and family monthly active rose 11% to 2.99 billion. Whew-wee. There was a significant reduction in the demand for advertising, as well as a related decline in pricing of our ads over the last 3 weeks of the quarter. Engagement was up as expected. So again, we're talking about ad rates being hit. Overall, Facebook says, screw you ad rates, I don't care. Now you could think about what Q2 impact has on them, but we'll see. Liquidity was $60.29 billion as of March 31st. Wow-wee. That's absolutely massive. That's massive. $60 billion just laying around for this company they can use. Are you kidding me? Whew. So let's get into these slides as we love to do. One thing I really want to point out here is this daily active user slide. This is obviously, let's zoom in for you just so you get the full picture here. Look at this. Just look at this. Massive growth. The growth just doesn't stop with this. Obviously, you saw a bigger uptick than usual this quarter, just due to more people having a screen time because they're stuck at home. And this was 100% anticipated. More people are at home not doing anything, so they're going to be on Facebook browsing. If you look at all the segments, you see growth consistently in every segment as well. They divided into rest of the world, Asia Pacific, Europe, US, and Canada. You see growth everywhere. So that is what I would call exciting growth. Big stuff. Big stuff for them. So in terms of monthly active, you saw another just great growth consistently since obviously 2018 here, Q1. That's 2 years of just steady growth. This quarter bigger than the others. Even bigger in terms of growth just due to the fact that, again, more screen time. And again, it's every segment that they divide into that they're seeing more growth in. It's pretty big. Oh, shoot. Average revenue per user, you will see a little bit of a decline here. Now, that's fair. And this is where I talk about, as I have been every single video, the quarter over quarter is not necessarily a fair comparison. We talk about year over year. That's what matters more. You're comparing quarters of previous years, not to the previous quarter. Quarter 4 is a lot bigger quarter for them, so that's why you tend to see more ad spending dollars, so that average revenue per user increases. If you're looking year over year, you see a positive growth in average revenue per user consistently, and it's a pretty big one too, and that's even after ad spend. So advertising is the major chunk of that. Obviously, it makes up the 90% of it for all of these, 99% of it, I should say. So ad rates supposed to decline. Obviously, you might see in quarter 2. You'll have to compare it to what they did quarter 2 of 2019. We'll see what that average revenue per user looks like. But if overall user growth is up, it tends to outweigh that a little bit. So you tend to see a balance out there. So very exciting stuff. Family daily active people, pretty big growth here. I mean, look at that. You love to see charts. I mean, that's what they're doing right. We love growth. That's weird. I don't know why I said that. But family monthly active people as well. Also good growth here. Charts are just lovely. It really helps you demonstrate when a company's growing very well. This was pretty much them smacking you in the face saying, you doubt me? Guess what? You don't need to doubt me. So family average revenue per user, as you compare quarter over quarter, $5.66 per versus $6.03 per, you see growth in that perspective and just consistent growth going on here. I mean, this is just definitely exciting stuff. Advertising, again, taking a majority of that. So pretty cool stuff going on here. Revenues, this more outweighs what I would say in terms of my quarter 4 statement, that quarter 4 is the biggest quarter for every company pretty much. It's over the time period where more people are on. Just ad rates are up. So quarter 4 is massive for every company. So you see Q4 here, again, just massive growth in Q4s. But overall, we're comparing the $17.7 billion against the quarter 1 2019, which is $15 billion. That's big growth, I'll tell you that. And again, the majority of their money is made from advertising. So that's where some of this investor concern came, that maybe they were going to be hit super hard by ad rates. I don't know if necessarily it's possible. How bad it'll get hit. This took effect for 1 month of their 1 month of this quarter that they got hit by. So I don't know what that looks like necessarily on a quarter 2 basis. You'll see ad rates again start to climb again when we start reopening things. We're talking probably June is fair to say ad rates will climb again, which could affect 2 months this time of Facebook's earnings. So quarter 2 could take a big hit, but regardless, this is a massive Q1 in the face of what nightmare we have going on. So revenue by user geography, you see growth in every single area in revenue by geography if you're comparing it to quarter 1 of last year. Very good stuff. And just overall, you see a natural growth pattern here over a 2-year period, which is fantastic. Ad revenue per user by geography. Again, consistent growth here. You really like to see it. Other revenue. So other revenue can consist of a couple different things from their games, photography, stuff like that. Everything they have going on, kind of, other than obviously advertisements. But you see obviously a massive difference between quarter 1 last year, but other isn't necessarily the segment they're chasing after. This, we're talking about $200 million. I mean, I might as well pull it out of my pocket. I'm just kidding on that one. I wish I could. But for them, it's like pulling a dollar out of your wallet. That's pretty much what it's like. So a dollar might be a lot to some people. Sorry, I should say that. One thing to note, obviously they had massive general and administrative expenses in quarter 1 of 2019. There's good reasons for that. This was during a scandal period in which we had concerns over data breaches. This company spent a lot of money trying to secure any data breach issues and hiring new people. So that is where you see that increased spend on that. So overall, spending was up if you look at it all things considered. A good chunk of that on research and development, obviously, this quarter. So one thing to consider, spending, expenses as a percentage of revenue. Spending overall was up a decent bit, but nothing too crazy. Income from operations. This is just where you think about this company and it just makes you feel weird. It makes you feel weird. This company, this quarter, their income from operations was $5.9 billion. That compares to last quarter, with a lot more expenses. Last year, this quarter was $3.3 billion. That's just so much money. Who needs that much money? I'm just kidding. But operating margin perspective, you do see a slight decline in operating margin, and that is because you see expenses increase on this company. And as you get larger, you expect expenses to increase. So that doesn't scare me too much in terms of that margin there. Effective tax rate of 16% this most recent quarter. That pretty good effective tax rate if you ask me. So that's what I'm saying. Net income, again, as I mentioned, doubled year over year. $2.4 billion versus $4.9 billion they brought in this quarter. Whew. That's take-home profit right there that they bring. That's money after all expenses. That's net income. When I say the company prints money, it prints money. We're talking about $17 billion that they brought in, right? They made $5 billion of that in terms of absolute take-home profit. Wow. Good golly, that's a lot of money to take home. I mean, whew. Diluted earnings per share, massive growth in terms of that, obviously, because we had 2 bad quarters here in Q1, Q2, all due to more expenses. But overall, a good EPS line in my perspective. Capital expenditures. This is where you see quite the difference here. Less capital expenditures if you're looking year over year. And from 2019 to 2018, there's a lot more capital expenditures. So a lot more money to go on with this company. Free cash flow. Good golly. Free cash flow of this company. $7.3 billion this quarter. That's the best they've had in these past 2 years. It's just massive numbers. Now I think we kind of enjoy what's going on here. Just very exciting stuff. So let's go to let's look at that balance sheet. I think that's one thing you got to look at real quick because we love to see it, right? We love to see it. Let's look at that earnings release. The balance sheet will be at the very bottom for us, and we're going to be happy about it, okay? It's a final thing to look at this company. So we're looking at the left line here from the March 31st, 2020. From a cash and cash equivalents perspective, they've got $23.6 billion in cash. And in marketable securities, they've got $36.6 billion. Holy cow! Total current assets of $69.349 billion versus last quarter they had $66 billion. So they grew that by $3 billion in total current assets. Total assets in general, yeah. I don't know if you understand what this company's doing, but you're going to poop your brains out. $138 billion in total assets. Can I compare that to you real quick? Look at the liabilities portion of this company. $33 billion in total liabilities versus total assets of $138 billion. We're talking about a company that has 4 times the amount of assets that it does in terms of liabilities. Are you kidding me? This company, even in this market condition, is a screaming buy because that balance sheet is ridiculous. The management team on this is absolutely absurd. They are incredible at this. They print money like no other. Look at that balance sheet. This is one of the best balance sheets you'll see out there. It just is. And they just continue to bring home money every single quarter. They just bring in more cash. It is absurd what this company's got going on. My gosh. This is just, it's wild. And I'm super excited about this company. It's still a screaming buy for me, even after this rise. And I think it's a justified rise, and I'm happy about it. I wish I had bought more, but I'm super happy about this. Just, this company is absurd. Absurd. Wowie.